All right, what do we got here? So it looks like a little bit of weakness, but the conference calls you got to wait for. These things might pop up. Chiweenie, good call. That's what it is. A Chiweenie. That's it. If I said it, I thought everybody would look at me like I had 10 heads. A Chiweenie. That's so funny. Chihuahua and the weenie dog. Yeah. They mix any breed these days, right? Now, but they are so cute. All right, let's get cracking here. Interesting things to talk about. We have the Fed and all, obviously, so some important things to talk about. We'll get to that. What I wanted to start off with, again, because I got a habit of thinking I'm just talking to members here, and I got to remind myself at times that I haven't spoke to some of you in a week. Okay, but I got some props up here too to show you guys. All right, so here's a little bit of a backstory of where we were at coming into the past couple of weeks and what we're seeing transpire now, because I think everything ties together, okay? And if you're wondering, no, I do not think there are signs of a new bull market, okay? I tell you why I don't think that's that important, even though a lot of us would want a new bull market, right? But as I've been telling you guys week in, week out, again, since October, I think trying to figure out if a new bull market has started or if we've seen the lows, if the market will ever go lower, is it a bottom? All that is just noise right now. And not only will completely useless, not only will cost us money as far as losses are concerned, and you can see what's going on, right? Just take a good look. And I think you learn a lot just by looking and paying attention to the rhetoric on FinTwit, okay? I told you guys, I've been around for a long time, and a lot of people gravitate to certainty, right? They think there's somebody out there who always gets it right. And what happens is whoever is right most recent, you'll see everybody gravitate towards that person or that source, right? So you saw it in the bull market. Again, I don't want to mention names because they're not bad people, right? But people who pound the table with certainty and conviction usually are full of themselves. One, that's a given, but two, are full of shit. Okay, anybody who's been in this game long enough is humble enough to not ever talk in certainty and with all that. Conviction's good, but there's no such thing as certainty. And you will realize some of the more experienced people out there, okay, have been humbled by this game where they won't sound like that to you. Okay, the people who do, and maybe there are some that have been around and still sound like that, either one, that's just their attitude, it's an ego trip, right? That's obvious. Or two, they haven't been humbled yet, and they will. So my advice would be, if you see that, not only walk away, but run, okay? Because that pain is coming. It's everybody. It's the inevitable, okay? And that's what humbles you in this game. You realize when you're in this game long enough that you're never going to be sure of anything. There's no such thing as a lock. And a lot of times the stuff that you had the most conviction about, that's the stuff you need to second guess, because in all likelihood, you're probably going to be wrong. It's the trades that are hard to pull the trigger on, right? You see the signals, but you're emotionally, you're not there. Those are the ones that end up being the most beneficial to you and most profitable. And you will learn that as you go on in this game. That's experience. It comes with time, right? You can't learn that in any textbook or on Twitter. But what we're seeing now is we've been in a mechanical bear market, as we've talked about, right? And we're going to touch on this subject a lot because I think it's the most important development, what's changed since the October lows, okay? But we've been in not only a mechanical bear market for one of the rare times in any of our careers all right, unless you're a lot older than me and you've been through plenty of other bear markets that I haven't, okay? But this one in particular, we were involved in the bear market where we had the Federal Reserve against us, right? We had the Fed rigging the game to the downside. We used that phrase over and over and over again, right? Throughout, from the start of this year all the way up until the October lows when we started to question it, okay? The Fed is rigging the game, and the upside, if the Fed is rigging the game, is not worth doing anything, okay? Because everything is highly correlated, right? Market goes down, everything goes down, every rally gets sold. It's very organized, very orderly, okay? So what happens is you have people who are bearish on the macro side or technicals or whatever the case that have been rewarded in a sense, okay? And not only that, feel right and look right throughout the course of this bear market this year, okay? And we talk about, one thing you will also realize in this game, and it's what makes this game so difficult, especially to the downside. I know a lot of even bears out there, forget about bulls or neutral players, bears, who will claim that bear markets, it's tougher to make money on the downside in a bear market than it is in any other market, okay? Because the bear market rallies and the squeezes that end up biting you in the ass cost you everything. You understand? And that's the market god. You think I'm crazy, okay? They let you get away with things, okay? They make you feel right. They let you build that ego and swell that head, and then boom, they bite you just that one time in the ass, in where you give back all your profits and then some, a lot of times blow up, right? We see it over and over again on both sides, okay? But what we've seen up until recently in this bear market, a lot of bears were having trouble where every time they were ready to get paid on the downside, okay, they had to survive one of these bear market rallies, okay? Right? We talked about that. This is where us long only, primarily long only players, were looking to make money, right? We talked about that over and over and over again. So what bears were having trouble was the opposite. They would make some money on the downside, but then they would either have to get out of positions or cover to avoid this, okay? Common sense, they would want to do that, okay? And it was really clean, right? You could see every time positioning or the VIX got down to a certain level, or I should say up to a certain level, eventually there would be that bear market rally that you could get out of the way, okay? So a lot of players were looking for the same here, right? Once this turned, they anticipated the bear market rally, right? They want to hedge and protect against this upside, so when the turn comes to new lows, they get paid, okay? And what happens? The turn comes, okay? They take their hedges off, and what do you think they do, right? You think about just the degenerate, how we're wired, right? Degenerates in it. We're all degenerates in this game. Some of us hide it better than others, right? If you've seen this and this and this, right? And you're all bared up, right? And you've been bearish from the start here, and you see this start to turn down, okay? Not only are you removing your hedges here, but you're likely anteing up on the short side, okay? Right? Now you got Mike Wilson on your side. You got every reputable guy who's been right, in quotations, throughout this whole bear market on your side. Let's ante up and press our bets, okay? And being prudent and smart in a sense, if they did hedge, right? If they did want to add to shorts and anti-up here, okay? What they did to hedge some of that risk, they went and they shorted the weaker stuff out there, right? which is just, again, common sense, like the NASDAQ in growth names that look like this. Okay, so they primarily focused on shorting this stuff. Okay, and they scrambled and chased into strength stuff like this, right? And this. Okay, so instead of just hedging markets, in other words, we were just looking at by what hedge funds were doing, they would get aggressive shorting NASDAQ and growth names that were the weakest throughout this bear market, okay? And if they needed to hedge and get long something, they did it in the strong stuff that was going up, right? They chased that. Energy, China, eventually Europe, everything that was ripping. Oh, another one, healthcare, the Mercs of the world, right? Those things went up in a straight line, remember? We were talking about them here. Okay? This is what they were piling into to hedge some of that short exposure. Okay? So now you have a situation that started to develop off the October lows and was involved in each of one of these bear market rallies, but eventually subsided. You had here where the Fed, which was rigging the game to the downside, they started to take their foot off the brake. Okay? They did it here for a bit, and they did it here for a bit. Okay? And just so I'll give you an example, here, each and every time, okay, they took their foot off the brake, you started to hear rhetoric and chatter of something breaking, right? The doom and gloom, the 1929 charts came out. It started to get really noisy. You can feel it, of something getting ready to blow up. Okay, credit spreads started to widen out. It got juicy. Okay, so the Fed would take their foot off the brake, allow a little breathing room, and bear market rallies would follow, right? Risk assets would bounce. And then normally, like they did here, Jackson Hole, when financial conditions got too loose, okay, they would slam on the brakes again, right? They did everything in their power to do so. They would just the obvious verbally talking down the markets like they were literally net short stocks, okay, throwing tantrums over market rallies, okay. Lo and behold, here, they took the foot off the brake, financial conditions ease, the most aggressive we've seen in any of these bear market rallies, and everybody's anticipating, right, including us, we had no reason to think different, okay? Everyone was expecting the Fed to do the same again. Okay, they're battling inflation, right? They need to stick to it. They told us they have to remain tight, right? Draw liquidity, remain tight, keep financial conditions tight to defeat inflation. They're not going to do it until inflation's dead. All right? The one big difference, inflation has improved, right? In this rally, okay? The big difference out of all of this is, and we just got, again, confirmation just yesterday, the Fed is not slamming on the brakes anymore. For whatever reason it may be, we all probably have our thoughts and feelings, and we're all wrong for all we know, okay? But for whatever reason it may be out there, okay, the Fed is now not as concerned as much about inflation as they are the economy. Okay? Think about where we were for the majority of this bear market. They were only concerned about inflation. Damn the economy and equities, right? They couldn't give a shit. If we have to put the economy into recession to do it, so be it. Okay. Now that tune, and not only that tune, okay, the tune is obvious, but the action has changed, right? Actions speak louder than words. Powell had every ample opportunity to shit on this rally as much as he possibly can, right? Numerous times, and he did it. Okay, so that being said, you have the setup that I just explained to you positioning wise. Okay. You have the Fed, who normally would slam on the brakes again here if they're taking their foot off of it, not doing that here. Okay. And then this is just at the index level. Underneath the hood is where all the fireworks have taken place. And why? Because throughout this bear market, people just seeing the same shit over and over again, positioning gets so lopsided. Let me show you. Okay, here's from Goldman Prime. This is the tech long short book. Okay, this is the shorting that's been going on in tech. Okay, this, and we spoke about this specifically more often. This is actually a tweet from my regular Twitter. But this, okay, is specifically the semiconductors, okay, who were the most aggressively shorted group amongst tech. Okay, and you can see again, this is not this week, this is not last week. This tweet here specifically is from January 23rd. So this is not something that just went on post-Fed. This has been in the works. And those of you who, again, are part of the steam room, we've been talking about it and been paying attention to the flow and paying attention to positioning, are well aware of it, okay? This is something that's been going on, manifesting for a few weeks now, if not a month now, and now has come to a head, okay? So you can see aggressively shorting on the tech front, okay, and growth front. And if they were getting long anything to hedge their shorts, they chased China, right? And where's the rest of it? Oh, yeah. Here's China. Okay, where's the date here? This is more recent. I don't have the date here, but this is like within the last week. Chinese equities saw the largest cumulative 4-week notional net buying in the history of Goldman Prime data. Okay, largest cumulative 4-week notional buying. Okay, and this, where's the other one? Oh, it's a different tweet. Hold on. No, why wouldn't it? What's this? Oh, and this is energy. And this is more recent as well. Okay, that's where when they're concerned about getting squeezed on the short side and the market rallying, okay, they weren't necessarily aggressively covering shorts. Okay, they were doing it in energy and in China. All right, so now with confirmation, right, of more recent, that the Fed, I'm going to pull up this chart just to keep you guys sane. Okay, now this is financial conditions, the blue line, right? You guys know we've been looking at this every week. Okay, this is financial conditions tightening, right? This is when the Fed takes the foot off the brake. Okay, see how they've been short-lived for the most part? Look what's going on here. Okay, so now that there's confirmation, and yesterday was official with Powell, and that's why you've seen a more emphatic follow-through on these things, okay, that the Fed doesn't seem eager to slam on the brakes. It's almost like the Fed saying now, we're done rigging the game. We're going to allow the market forces and the economy's fundamentals take over. Okay, that's my slang interpretation of what's going on. Want to see order flow being discussed in real time? I'm on a live broadcast during market hours every day where I call out the most actionable orders and point out important sentiment and positioning updates throughout the day. Go to wallstreetjesus.com/the Steamroom to apply for a 30-day trial and check out our community of traders. Okay, the Fed feels they've rigged the game enough, and now they want to take a step back and see how much damage it ends up, right, occurring, how much of an impact it has, and let the economy and the fundamentals, earnings, all that, take the wheel. Okay, so the moral of the story here is you have the Fed stop rigging the game. Okay, they stopped rigging the game. And now you have a scramble over the last few days of players being short out the eyeballs, stuff that you would sell when the Fed was rigging and raising rates, which is NASDAQ growth. Okay, and what's interesting to me, okay, and this is where I was totally wrong. I thought, again, if you remember, you would know I was wrong. I thought we would see selling here, and actually we're just starting to see that now. Okay, so maybe I'm not 100% wrong yet. Okay, maybe it was just delayed in a sense. Okay, but this is where they're long. Okay, this, right, and we're seeing it now, right, is where they're long. So in simple English, what we're seeing is this: XLI, XLK, right? Simple ratio chart of where positioning has been of late. They all got long industrials with overseas exposure and short tech. And now look what's going on. You guys understand this chart? Simple, right? Okay? It's just the unwind of positioning. That's all it is. That's all it is. Based on a very important factor, right? The Fed has stopped rigging the game. I mean, that, for Steamroom members, you know how important that is, okay? Because that's what's changed for us since the October lows. Not that the market bottomed, right? I never mentioned the start of a new bull market. I never mentioned that we may not ever see new lows again. I have no clue. But what I did mention is we're going to start where we now are able to find opportunities in certain pockets and spots and individual names of the market. Right? That was the change off the October lows for us. Is that if the Fed is done rigging the game, there will be opportunities, tactical opportunities for us to try and make some money. That's the only difference. Okay? There were opportunities while this buying was going on in industrials and overseas names and everything that ripped, right? And more recently, right, while all those names were absolutely fried, right? Fried, there was the squeeze opportunity once everybody got wind that the Fed stopped rigging the game in NASDAQ names, and especially heavily shorted names. And if you look, been all the heavily shorted names really that have really, caught fire here, okay? In the grand scheme of things, it means absolutely nothing, okay? Nothing. And as a matter of fact, for signs of a new bull market, this is not part of this is not part of the ingredients of a new bull market. This is not how new bull markets form, if we want to use that terminology. Okay? This is basically, okay, this is what everyone's oohing and ahhing about. Oh my God, Carvana, this is not normal. 100%, 200% in a week. It did it here. Okay? If anything, what's more shocking to me than the squeeze in Carvana and how, percentage-wise, how big it's been, is that we haven't seen more of it. Okay? Look at this. That's the more unusual and most amazing thing to me, is how these things went down in a freaking straight line for such an extended period of time without squeezing anybody. right? So you had shorts just continue to go back to the well and make money, and they forgot that these things can possibly squeeze. Okay, not only that, you got profitable shorts who are probably locking in some profits down here. And look what this looks like, you know? And if you look at any of them, right? Any of these names that have squeezed, like even this thing, which we actually liked because of the theme behind it, right? The momentum behind it and the flow behind it. This thing, right? Look at this. Fell out of bed. Look what it looks like. You know? So the point I'm trying to make here is big picture wise, there's nothing crazy, unusual, or even that mind-numbing or changing going on right now. Okay, we got confirmation that what we suspected just by looking at the action and individual names, right, that the Fed may be done rigging the game. We got confirmation of it. And now it's come to a head in especially the stuff that has been heavily shorted while the Fed has been rigging the game throughout the bear market. All right? So that's simple. The market, and you guys know, okay, as much as we were seeing opportunities in individual names, for the market itself, and to this day, I have no idea. I really don't know, you know, as far as to even slap a risk reward on the indexes, I have no clue how high we could go or when we run out of steam. Why? Because I just told you, if before the market did this, okay, before the S&P 500 did this, okay, what we were seeing in the signals we look at is possibly an unwind between the industrials and the overseas stuff and energy, right? All the stuff that's been strong, okay? And the out of favor stuff. That gap should close. However it does it, we don't know, but there should be outperformance from the stuff that's been shorted compared to the stuff that's been crowded, okay? Now, if you did it just an even math to keep it simple, and I told you all the crowded stuff was going to sell off and all the shorted stuff was going to squeeze, what would you tell me the overall market would do? You know what I mean? Flat, up a little, maybe down a little, you know? So that's why, you know, even till now, I still have no handle or no clue of where the overall market can go as far as, you know what I mean? The play is not on the overall market. The play is on the unwind underneath the hood. That was the play. So going forward, because again, we don't want to spend too much time on spilled milk, okay? What we have now is we have a lot of these NASDAQ high growth and tech names, which have seen significant rallies, some more than others. Here's the semis, which was the meat and potatoes, right? This was the most shorted group amongst hedge funds, the semis, okay? Now that these things have rallied, obviously there's no play there. There's no edge there anymore, okay? And unfortunately, the other side, which we were hoping would come in if the tech stuff rallied, they really didn't come in much yet. You understand? So now we're in the pickle where you got stuff that squeezed hard over the past week or two specifically up in a straight line, and the other side really just started to sell off now. So now it's tough. Even individual names are tough. I mean, we were at a point where if we didn't see a squeeze in the NASDAQ names, okay, we basically had nothing set up. We had nothing, okay, because all this stuff almost borderline went parabolic, right? So my opinion, what we look for here we need weakness no matter what. The only thing that loosens this up is weakness. Again, it doesn't have to come at the index level. It could come in pockets, but we need something to come in, and we need to see signs of some sweeper buying or possibly offside sentiment, whatever it may be, that there could be a decent bounce there worth looking for. Here, it's like we're playing musical chairs now. You know what I mean? You're like, okay, right? Like this is a recent name we liked. All right, Path is a laggard. Boom, boom, boom. Now what? Now what? This stock could possibly still be, these NASDAQ stocks could still be in an uptrend. Okay, they could still be in an uptrend for the next couple of months. Very easily. Wouldn't shock me one bit with the Fed doing what they did, right? If there are no signs of inflation heating up, right, and the script is as it's been, what you could see is a little profit taking and kind of the higher lows type thing for a little bit here, right? So you have opportunities to play off dips. But here, okay, maybe there's a little more upside. Eventually there's going to be that wash, and you want to avoid that at all costs. So we need some weakness somewhere to loosen something up. We got nothing. We got nothing. And that's kind of like I came into today, right? Personally, we've been trading a lot of these names, just even day trading them. They've been unbelievable, okay? But you come in today and literally every single name, not only up this morning, but has been ripping. Even the laggards, right? Even a name like this that looked like dead wood, and we're like, what the hell? When's this thing gonna, right? And then now you got a pop here. Yeah, it's just, again, the phrase I like to use, all the eggs have hatched, right? It's like the hen. She's sitting on the eggs, sitting, and then boop, little chicks are popping up, cracking through the eggshells all over the yard. All the eggs have hatched. So now, again, even for like intraday trades, the problem is you really got to be sharp with the knife. Like you don't understand the luxury we had. It was a gift going into earnings season where I would sit in a name like Path for a day trade, and even if it didn't move right away, I was willing to sit in it for most of the day with a stop. You understand? Because I felt like if the squeeze came, it's worth it. Now, these things could go up a little bit more, but the risk reward is just not there, right? Look, here's an example. What are you going to do with this now at $20 today, right? What are you going to do? You're going to see this thing running and you're going to buy it at 19, $20, even for an intraday trade. And then, whoop, it closes at 12. You understand? We're here, right? And you're seeing action come in. It's worth it. Right? Now, case closed. Case closed. So that's why, from this point, as long as it takes, we got to chill out. The good thing, and you never hear me say this, the good thing, it's earnings season. And earnings season can loosen things up for us. You know what I mean? You could have now just selling just because things have run off bad earnings. Nothing's changed. The earnings, we're in earnings season now. And you realize we're ripping. The earnings have been awful. They're not good. But the problem is that sentiment and even price action has been so bad in these things that they weren't Armageddon-like, and they were finding reasons to rally. Now, with some of these things doubling and tripling over the last couple of weeks, you understand? You got some bad guidance or something, they're going to get whacked. So we got to chill out. We got to chill out. And for the overall market, again, I'm not making excuses. I know I'm an individual names guy. I think there's more of an edge, there's more information, the whole 9 yards. But I always like to have a handle on the overall market because you want the wind at your back against as opposed to against you. I have no idea. I really don't. I have no idea. I don't think anything has changed here. I think we're still in what we've been in since the summer, right? And until we get to extremes, there really is no edge. There's no edge. Do we get to the top of that range at 4,400? Only the gods know. What information do I have to tilt the odds in my favor that it will or will not? You understand? What information? There's no edge off positioning anymore, right? Sweeper activity, now we're in earnings season. Sweeper activity, they've been stock picking. They're not playing the overall market per se. There was no information to give us any edge of whether this market goes to the top of the range or to the bottom of the range from here. Okay? In all likelihood, it's probably going to be more of the same. Up, down, sideways, crooked, drive everybody nuts who's on the kick of whether Armageddon is around the corner or new bull market, right? It's either those two extremes that are out there. Nobody's thinking of what if we just do this for longer than everybody thinks. You know what I mean? Think about it, right? Every bear out there is talking about crash. Every single one of them. And the way they cash a ticket on crash, they need some exogenous event. They need something. They need 9/11 right now. Because the way things are lined up, they're not going to get it. They're not going to survive. They're going to get shaken and stirred out of the trade. If they have it already, right? If they have it already. Like how do you sit right now, especially if you ant that up here, right? If you ant it up, how do you sit through a short? How do you sit through this? You just sit and get run over here? Or especially if you're shorting names and those NASDAQ names, you can't. So they're going to get shaken out. And then listen, all you bears out there, I can't disagree with you. I see what's going on amongst the riffraff and how excited they get and how excited they've been. As a matter of fact, right, we were just talking about, forget about some of the underbelly names that we're talking about covering. For the first time in this bear market, there's been a rush of buying in, the FANG names, right? Into earnings. So, you know what I mean? They're not dead yet. They're still around. I get it. But in all likelihood, what it looks like today, right? And that's all we can examine is the information in front of us today. It looks like more than likely this is going to go on throughout the first half, right? Give or take, maybe sooner, maybe later. And then we're going to see whether the economy, the wheels fall off, or the Fed has pulled off the impossible. And right now, the market is pricing July for when the Fed starts getting back on your side. Is it going to come in the midst of economic Armageddon, or the crash of inflation and Powell on the cover of Time magazine? Yeah, the market already has priced the pause. The Fed pause is being already priced in. Okay, the Fed pause is a lot different than the July cuts. Completely different. The Fed pause is the Fed taking the foot off the brake and leaving it off. And that's what we've seen. Right? That's the Fed pause. The market is not going to wait till March and be like, okay, Powell's going to stop raising rates. Let's rally. You guys know, right? It gets front run. So now the next thing that's going to get front run here, okay, or adjusted, one or the other, is that July that the market's pricing in. And why did the market get excited? Overly excited yesterday off Powell is because for the first time, right, they could make sense. The market made sense. The market's been pricing in July cuts, and everybody, including us, are like, what was the market drunk? What? How's the Fed going to cut rates in July? Right? The only way they do it is if the wheels fall off the economy. And then lo and behold, yesterday, right, Powell gets asked in the presser, oh, well, listen, you said you're not going to cut rates, okay, in 2023, but what about if inflation crashes down to your target? And he left that, hey, you be quiet over there. He left that door open. So please, Daisy, please, I don't want to have to kick your rear end out. This dog, I swear to God, only during webinars. We can't, the market even gets it wrong. We talked about that, right? We can't predict it. Where is the thing I have? Oh, here, hold on. We just got to pay attention to the signals behind the scene. That's all. We don't need to try to predict it. More costly to try and predict it. Okay? If the market's wrong, they're going to have to adjust that. Where do I have the 2-year on here? Oh. That's not it. Forget that. Right? So that's what we're looking, right? If the market's going to adjust that, they're either going to move this here, or if inflation improves further or the economy deteriorates sooner, they're going to push them sooner. And that's when we'll have some more information on that front. So the moral of the story, big picture wise, right? And again, this is nothing new. Nothing has changed. It's nothing new. The moral of the story is, until we see something change, something give, right, in the stuff we look at, we continue to look for opportunities in individual names or flow at decent spots. For trading opportunities. That's it. Okay. If the Fed is not rigging the game, if they're sweeping something into a pullback in a name you like, you can play it. Now you don't have to rely solely on the market to cash a ticket. If the Fed is rigging the game, you can't. You move out of the way, right? So again, these are credit default swaps. This has been telling us, right? Recession, recession, recession. Again, even myself, I'm waiting for the economy to fall off a cliff from what all the Fed has done. Okay, I'm no exception. I thought the end of 2022, we start seeing things blowing up left and right. This has been telling us completely different, right? Completely different. This tells you do some stock picking. You can play. This tells you get the hell out of the way and sit tight. Yeah, well, Praveen, that's what was the difference yesterday off the Fed meeting that shocked everybody. Okay, that's why nobody thought they would cut in 2023, but Powell was asked yesterday, if the economy slows, no recession, but inflation comes crashing down, will you adjust monetary policy? And he said, yeah, it'd be something we look into. I mean, that's, you know what I mean? That's big, right? That's something we didn't even think was possible. Listen, yesterday's press conference, okay, he said a lot of the same things he's been saying. I get it, which is hawkish in the category. We're not done yet. We're still battling inflation, blah, 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 blah. But you couldn't be any more dovish than Powell was yesterday. I'm sorry. You couldn't. I don't know if he did it purposely or what, but considering what they did over here, okay, in Jackson Hole, compare that to what you heard yesterday. Okay? Yesterday, it almost was like inflation's not even a threat anymore, and he's more worried about the economy than anything else. Plain and simple. Now, again, right or wrong is irrelevant. Now, it's not that irrelevant, but irrelevant to what I'm talking about here. Okay? Because if inflation does heat up again, right? If there's a round of inflation that heating up, he's going to look like a jackass. And you're going to see the market react accordingly. Okay? Right? If the China reopening or anything like that, if there's an uptick in inflation and you just pulled the stunt you just pulled yesterday, that's why he took a lot of heat. You know, that's why he took a lot of heat. But again, it goes back to the old actions speak louder than words, okay? Based off this, right? And this is what everybody, no exceptions, okay? Everybody thought yesterday in the press conference, Powell would have to put his foot down no matter what he felt deep down inside because of this. Okay, they know what this means, you know? They know it has the capability to flare up speculative behavior, right? They know. And if he really wanted to, right, if he really felt that he needed to kill inflation and keep financial conditions tight and blah, 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 he could have done anything. He could have raised 50. He could have done anything to put his foot down and put the kibosh on everything. And he did the total opposite, They asked him about financial conditions. He didn't even make it out to be like it was a concern to him. In other words, he was like, well, you know, from where we started, we're still tighter than where we were. That's how he phrased it. So he basically told the street, don't worry about it. Don't worry. Yeah, it came in and we're back even lower to where we were back. Don't worry about it. I'm not concerned. Yeah, I mean, listen, it can all backfire in his face. You know, and I could easily sit here and bash them too. I don't think it's an easy job. I know the people on Twitter, they think they can run the Fed and do everything else included, you know? It's not easy, right? He's weighing, you know, two scenarios here where he's battling inflation. He's got to worry about the economy. He's going to get political heat. Already, what's-a-face is tweeting out every 5 minutes that he's Satan for killing jobs, you know? He's not in an easy spot. Yeah, Senator Warren, right. You know, he's not in an easy spot. But again, that to us, unless you're interested in all that rhetoric that goes on social media, we shouldn't put too much emphasis or care about it, you know? What does it tell us now? What does it mean now? And if it does change, what will cause it to change? That's all. You know, otherwise, you know, think about it, right? Bears who are thinking different and thinking their way is the right way have been shorting throughout this whole squeeze and getting manhandled. So again, it's not as easy as when you're in this type of environment. It's never easy, right? You can't just coast like you're in a bull market and you wait for just short-term tactical signals and buy that or buy any dip you can possibly see. We're not in that type of environment. We're in an environment where you can't try to predict things. It's impossible. You'll get some stuff right, you'll get some stuff wrong. You're running in circles. You take the information that's in front of you on a day-to-day, week-to-week basis, and you try to interpret what it's telling you now. And you try to find some tactical trades, right, at decent spots to combat it. That's it. So that's what we're looking at here, right? If for whatever reason it may be, we start to see whether the Fed's rigging the game or something breaks in the economy, we start to see signals like this doing what we don't want them to do. That's where we step aside and let it play out. But, you see the market come in for a couple days and all this stuff is dead. That's a buying opportunity, especially in names. You know what I mean? Like, didn't we just saw that, right? Weren't we just talking about that? There was a down day. Was it, I think maybe this week, last week, I can't keep track of time anymore. But there was a down day and the credit markets didn't even flinch. They didn't even flinch. Things were starting to get rowdy. It looked like some selling was coming in and the credit markets yawned. And it ended up being an opportunity. Was it Monday? Monday. Ended up being an opportunity. Here, these are, what we were looking at, credit default swaps. These are spreads, corporate bond yield spreads. Look at this. Okay. If there's concern about default out there, okay, or liquidity because the economy is deteriorating, all right, this wouldn't be doing this. This wouldn't be doing this. Okay. Now, again, maybe this changes. Maybe we come in next week and we're talking about what just happened in a matter of 2 days. It's possible. Okay. But for now, instead of trying to predict that, which is impossible, this is telling us, look for opportunities in individual names. You know what I mean? So this is corporate bond yield spreads, and this is what they look like short term. Again, no coincidence that when you're in a bear market, there's that high correlation. This is blown out. I wanted to show you guys so you could see how they act when shit hits the fan. Okay, so this was the lows into 2016. You can see, right, that acceleration. Whoop. Here's 2020. Whoop. Look, you take 2008. Look at this menagerie. They don't even know what to do with themselves in 2008. Here's the whatchamacallit, debt ceiling default. 2011. We may experience that come summer, right? Okay, and this is what they're doing here. That's what they're doing here. Okay, so it's not an all clear signal where the indices rip to new highs and new growth leaders start to emerge and buy all the high growth names that are at discounts. We're not in that environment. We're still in a poor macro backdrop, right? Where earnings are likely to get worse, more than likely than better. Well, they're still shitty, especially in certain sectors, I should say, more than others. All right, but things aren't coming unglued yet. All right, and Praveen, I know you guys especially, we've been talking about that. What's likely, we're in a little sweet spot here, right? It's not that sweet, but we're in a spot where inflation is cooling, the Fed is chilling, right? The Fed's chilling out, and the economy is not falling off a cliff yet. Right? That's a rare spot, because what usually happens is if inflation is cooling and the Fed is chilling out, we all thought the economy was likely going to fall apart. It hasn't happened yet for whatever reason. It's just the perfect remedy to think of some stability and outperformance and finding alpha in individual names. That's the sweet spot. That's the sweet spot. Right? Doesn't mean new bull market to new highs at the index level. It just means, again, stability, and look for names that can outperform that stability. That's the goal. Oh my God. I mean, honestly, if he, and again, if I had $1 for every time we've said this about, especially the Fed, but if the economy hangs in there and even just sees a mild recession out of this, and inflation goes away, I mean, Powell's going to be, your grandkids are going to read about him in textbooks as a king, you know? Because again, the history's not on his side. You know, a lot of times, if it's real inflation, the only thing that really kills it, you got to kill the economy, right? That's the remedy. Now, you know, a lot of people are saying that because of COVID, right? This round of inflation may be different. This is not the 70s style inflation. This was inflation that stemmed from COVID, and then things getting jammed up at the ports, and right, and then you throw the war, Putin in the mix. It may be a different type of inflation, and maybe it's possible. I have no idea. I have no clue. You know, no clue. But I agree with you 100%. If he pulls it off, he's going to be king. You know, for as much heat as he's taking, he's going to be king. But we shall see. You know, that's the tricky part about bear markets and just being in this type of climate. It looks okay, it looks okay, it looks okay, and then boom. You understand? Like the present always looks, we could get through it, because you don't see the bad shit that's ahead. Obviously. You understand? But that's usually how these things work. It looks bad, it's hanging in there. You got some hope, and then kaput. That's the usual playbook. And not to mention, okay, without putting tinfoil hats on, that's not mentioning what we've been talking about. You have some event, right? Exogenous event occur at this particular time in this particular climate. Case closed. That's all it will take to send things into a tailspin. And I told you guys, I got deja vu. Post 2000, the same thing, right? Look, people were saying, oh, you know, wow, look at the resilience. You had this go under, you had that go under, Enron, WorldCom, you had internet names go to zero. And guess what? This market is going to make it through this. And then all of a sudden, boom, 2 planes go into the Twin Towers. Menagerie. You can't, how do you predict that, right? How do you forecast that? You can't. So, you know, right now, the way things look, yeah, he looks like he's in good shape. The thing that's going to be interesting is, well, like you guys are saying, like you see like certain economic numbers, the manufacturing numbers, you're seeing a little bump up in. You got China reopening. What happens if, and it would be totally normal too, if there's an uptick in inflation. You understand? Think about it, like, let's fast forward and get to that point, right? If you see a little flare up in inflation again, it'd be like all hell broke loose, no? And depending on when it happens, like, what are you going to do? If that happens in March and he paused supposedly, and now you're going to start hiking rates again, forget it. That's where those July rate cuts come in a bad way, But how you want to sit here and try to predict this stuff? Good luck. Good luck. So anyway, in the meantime, we have earnings. You see a few names get hit off of earnings. They catch a little action, right? You think you could get a bounce out of them. That's the game plan right now. That's the game plan on a case-by-case basis. And then let's see how things shake out over the next couple of days. But it's not, things can loosen up. But right now, there's just nothing to look at right now. There's nothing to look at right now. I know energy has been coming in a little bit, right? But the energy name's not so much, has it? These things, some of these things hardly even budged. I guess some of the others did, though. I know Phil was talking about nat gas got annihilated. You know what's funny? I don't like to bash anybody, but they bring people on CNBC like they're God. There was an energy, supposedly the nat gas Jesus, or whatever the hell he is, the best energy trader on the face of the earth is how they depict them. That's how they label it on the CNBC screen. And I'm telling you, I remember it because I was like, wow, this guy's getting cocky. He was talking about the dip in energy, okay, this here, and how he would buy it with two hands going into the heart of winter with everything going on. Okay, this was the top energy trader according to CNBC in the business. Yeah, and he had conviction. Again, I'm not picking on it. It's just the point I'm making that, everybody gets it wrong, man. Nobody, this is, especially now, bear markets are tough. Bear markets are tough. And there's a reason why a lot of the more experienced people will tell you, listen, what are you doing to bear? Go to cash. Go to cash. They're not easy. I got my ass handed to me in nat gas. Yeah, this nat gas is dangerous, right, Jacob? The moves in it's just nuts sometimes. I see these things. I remember that put seller, I think, got blown up in nat gas. Talking about the city trader who took 40 million bonus. No, not him. Talking about, I don't want to mention names, but there's just somebody on CNBC comes on a lot for energy, and was talking about crude, how he doesn't see how crude doesn't go higher, and how nat gas he thinks is a gift. 40. Which guy are you talking about? City trader. Really? 10 monitors with a baseball bat. That's a go. That's a common thing. Yeah, this game could drive you nuts. This game could drive you nuts. But yeah, I don't even, I don't even have any feel on these commodities. Crude's just been dead. Crude's been dead. I like this, the stuff that should work this year looks good. It should at least go into breather mode a little bit here. I think people got too bulled up chasing this. I mean, look at it. Where is it? Nope, that's not it. Yeah, this is it. You know, like from my experience, you're not going to fare well buying into this, right? Like you want to see the little shakeout at the least, especially a thing like China. But I agree. I think this year could be a decent trade. Gold too, right? We've been talking about gold, the miners specifically. Like they didn't even pull back yet. They didn't even pull back yet. Look at this. So if you get a little shake and bake, or if not, some consolidation, and then we see, some sweet buying start to stem up again in these things, that's the opportunity. We're caught in the middle here. Or like I said, the NASDAQ trade doesn't have to be dead. It doesn't have to be dead at all. But you got earnings all over. What were you guys talking about? Apple? I heard people screaming about Apple. What happened to Apple? The conference call? I missed what you guys were saying. Bad guidance on Apple? I didn't see what you guys were talking about earlier. Apple reports first earnings miss. Oh, wow. Yeah, 140. Yeah, that's I wouldn't be surprised you see buyers come in these things. Amazon down. I like me personally, you guys know these big names, I'm not big fans of. I would like to see dips in the underbelly. Oh, Google too. I forgot about Google. In some of these underbelly names that have been smashed, I would like to see them come in a little bit. You know what I mean? A little chop sideways. And then maybe we can play those. That the rallies don't have to be like for this, like these type of. Ooh. For trades, I'm talking about for trades. Because these things got lit up. And what the reason why is if you got the Fed pause in play, right? Your Fed's not rigging the game right now, and you got that little period of time. What you may see dips being bought, right? Even if they don't go bonkers and squeeze aggressively further to the upside, well, you may see where you get these higher lows for a little bit, for a short period of time, right? What the hell was that? You guys know what I'm talking about, right? Comes down here, find some buying, right? And then what usually happens is this, and then you get a real, like legit bear market rally. And then come springtime, that sort of thing. Meanwhile, springtime is right around the corner. You believe it's February already? Two things. It's February and tomorrow's Friday already. Okay? Tomorrow's Friday. It's the weekend. It's crazy. My life is flashing in front of me. And I'm over here staring at charts of Path and Kathy Wood. By the way, everybody, you could put your head on the pillow and rest good tonight. Kathy Wood reiterated her $1 million target on Bitcoin. Don't fret. Everything's beautiful in the world. Don't worry about a thing. But look at Bitcoin, right? Like that's a bear market, nice bear market rally right there. Where is it? 22, 23? Jesus. But yeah, guys, I wish I could even pretend and lie to you like I have an idea and say this is the start, this is it, this is the start of a new bull. I think these things are dead. I really do. Barring some miracle, I don't see it. I don't see it. Can it trade in a range, for a little period of time? That's what I'm saying. Bear markets, they're not corrections or crashes. They go on for long periods of time. It's unusual for things to go down in a straight line in the bear market. It's normal to get these bear market rallies to shake bears out, and then the pain comes again. So we could still be in that scenario. But unfortunately, I don't think the good times are better yet. I think we need to see boom first. But all kidding aside, the last, and from the October lows, and even probably the beginning of this year, well, the markets have been good at the beginning of this year, but individual names have been entertaining and profitable, no? There's been more opportunity in individual names, right? So, I don't like to use the word content, but we have to be content with that, I think, with this. Don't worry about swinging for the fences on the big short and catching the big boom or anything like that. Yeah, so I think we just keep doing exactly what we've been doing, whether you're extremely tactical and day trading, or you go position by position trading overnight. Just don't get caught with a bag. Okay, it's not worth it. Do not get caught with a bag here. Okay, it's okay to run into a loser, a couple losers, right? When you made some money on some other things here and there. Okay, do not bury yourself. There's no reason for that. Still no reason for that. Yeah, good call, Ravine. It's always like that, right? You run into a nice stretch and you see some big winners and you wish you had them. So now you start to chase that and it's over, right? You go through a little period where you just little reversion to the mean type thing. So true. So true. That's a good call. Now, that's a good call. Nice. Yeah, pick your spots. It pays to be picky. It pays to be selective. No reason to get FOMO. And we want to be around when the real good times are here. That's the goal. We got to keep our eyes on the goal. True. That's all you got to do is learn from those lessons, Praveen. If you correct mistakes, you get better and better. And honestly, it doesn't ever end throughout your whole career. You're never going to get to a point where you're going to say, oh, okay, I got nothing to work on. It's a never-ending process. But yeah, that's what part of the game that makes it fun. Right. That was my problem early on. Every time. I did the total opposite. Like you said, I would wait. Once I made a little bit of money and I was hot, then I started to ante up, get all gassed up, and then boop, right over the head. And I gave back everything I made and then some, every time. So I had profitable trade. Okay, now I'm going to go after this one. And then boom, I spun my wheels. That was a thorn in my side early on in my career, boy. Oof, so frustrating. Yeah, Eric. It's just, but it's like that in life, no? In bowl games and everything. in sports. But so much, and I remember what my problem was more in individual names. I'll give you an example. Like especially like in bull markets, there would be sectors that would heat up. So kind of, let's say like this AI theme that's going on. So I would trade an AI, I would trade another AI name and another one, and I'd make some money. But I see that AI went from 5 to 50, and I sold it. It was just a profitable trade. So then the next AI name that I discovered, then I would size up, and then I would give it more leash, and the rest of the story. Right? So searching for the next AI and the burying me where I should, the thing to do was to notice the first AI and swing. Yeah. Eventually, right? Eventually you hit that ceiling. It happens all the time. Exactly. Soon, yeah. I'm not, but soon I'm gonna tuck away. Unless, I say tuck away, unless I get a pop that I can't, if a minimum 3 or better, and then I take it. Otherwise, I want to, I didn't trade soon. That's the only one I didn't trade. It's funny, right? The only one. I should have held like AI or any of the other ones. And I'd be obviously in a lot better shape. But I traded everything else. Soon, I'm going to keep in my pocket. Yeah, usually I do, Robert. I do. If AI, and it may not even be right now, this go around, I'm willing to hold on to it. Maybe it's 6-9 months from now, AI really heats up and you get one of these cuckoo moves, So that's why I played it. I didn't play it for trade. But I've done better. Like this was the one. This was the one because it was the first one. Right, it's like my little golden lotto ticket type thing. This was the first one to catch action, right? And then with the symbol AI, like if you wanted to make an AI play, this was it. But I wouldn't, first of all, forget even, I probably, no way it'd still be in it, even if I had intentions on holding it. You know what I mean? I'd be long gone. And I wouldn't survive a pullback. So soon is cheap enough that I kind of almost like forget about it and maybe I get lucky. So that's kind of why I'm kind of playing it. Yeah, I forget it. I am quick on the trigger. Let me ask you something. Every time I see this SI, I see it up big, and then the next day I look and it's in the same spot. This SI. You guys notice that? Every time I'm like, oh shit, this SI squeezing nice today. It's up 4. I look the next day, it's back at 13. I'm like, what the? And look, it did it again here. Went up to 25, and now it's back at 16. And Kathy said 1 million. Like these guys, and you got some big names getting behind this. How these guys are going to survive? I think like BlackRock took a stake. You got some big names that got behind it. I don't know where they get this confidence. Like, I don't know. They've never been in a bear market. I don't know. And you got reputable people too. I don't know. I was asking myself the same thing. Where they get this confidence from? Because you talk to anybody who went through the 2000 pop, and the last thing you will ever sense from them is confidence on anything, even when this is over, But there's a lot of cockiness out there. You're right. A lot of cockiness. A lot of cockiness out there. And things that are buried, they're cocky. They're not even scared of what has happened. But they haven't been through it, I think. The only thing they've been through, a lot of these kids playing, is COVID. And look what happened there. You had the crash, and then everything, if you bought it up, you got paid handsomely. You know, this is not the COVID crash. Right? The Fed threw in the kitchen sink there. Now the Fed's doing the complete opposite. The other thing too, on the liquidity front, because don't forget, there's been liquidity drain all of 2022. All right. Supposedly, again, I'm not a liquidity guy. You guys may know than me. Correct me if I'm hearing wrong. But supposedly the liquidity backdrop is not bad for the first quarter or two this year. Right? Because of the debt issue, come the summer, is that why? Treasury offsetting QT, exactly, Matt. You know, so that's another plus, right? That's another plus. So again, it's not full-fledged QE, right? Where the market's going to run like a banshee, but you're not getting that drain. Again, it's not, the game is not rigged. I'm telling you, that's, I wish I could make it sound more professional. You know what I mean? Like some of these guys on CNBC and Bloomberg, but that's the main takeaway. The game right now is not rigged. That's the main takeaway. So the stuff that we look at, sweeper activity, you know, even some short-term sentiment, buy signals, we have an edge there again. When the game is rigged, you have no edge when the game's rigged. Nothing matters. You understand? Nothing matters. There's no edge when the Fed's rigging the game. You know, just like on the way up, right? You got the Fed printing money, all out QE, doing whatever they're doing. Your sell signals, there's no such thing, right? All goes out the window. So we had the same thing in 2022 to the downside. Right now, we're getting a little relief. Exactly, right? You can buy any piece of garbage SPAC or come up with a sexy story and print your own money. Boost, don't get me started. You love to get me started with that stuff. Yeah, you're right. All right, guys. I'm going to run. As always, appreciate you guys stopping by. I'm going to see the majority of you mañana. Let's see. Maybe we get a little shaking of the tree over the next, well, we only got tomorrow's Friday, but the next couple days, and maybe I'll loosen something up. We can play for bounces. Yeah, jobs tomorrow. So maybe it starts tomorrow. You know, maybe it starts tomorrow. But that's it. We want to look into weakness now. So at least we can get a little bounce, risk reward there. Oh, CPI next week. My God, the fun never ends. That's going to be interesting. That's going to be hedge fund update. We should get, if not tonight, tomorrow, Praveen. Oh, CPI the week after, Sahil. Valentine's Day, Silver saying. Yeah. So we got a little breathing room. Don't get me all worked up here. We got a little breathing room. Have a good night, guys. I'll see you mañana.